During my Benzinga.com interview on Wednesday morning, which I'm sure many of you saw, I didn't feel like I had the chance to fully explain my Alibied Selling Theory. And basically I started to discuss it, and then I was hit with some questions about whether the Fed is going to engineer a soft landing, which I wasn't sure whether that was a serious question or a joke, given the fact that they've never engineered a soft landing, and also what my outlook for 2022 was, which to me is sort of a foreign, bizarre sort of question, because the way I operate, I deal with real-time information coming at me, and I make my decisions based on that with no predisposed bias one way or the other. So I don't need to have an outlook for 2022 any more than I needed to have an outlook for 2021 or even 2020, because it's very difficult to predict events in advance. And as Bill O'Neill used to say, you don't need to know what's going to happen in the future. You only need to know what's happening right now. And that's basically what I focus on. In my December 1st report, which went out to members, was available on the website, the Gilmo Report, I started the report out with the following discussion. In my weekend video report, which had aired the weekend before this was on Wednesday, December 1st, I discussed the concept of alibied selling, something that Bill O'Neill described to me back when I ran money for him, and how it may be applicable to the current market action. Alibied selling is essentially a method or technique used by institutions when they are engaged in the overall process of distribution. It starts out with a general intent to exit the market by institutions or whatever smart money exists out there. Some might argue that the new institutions are the mysterious algos. So even before the big break after Thanksgiving on the Omicron news, many leading areas of the market were already coming undone days and even weeks prior. This was evident in the action of the broader market indexes, like the NYSE Composite Index, which has been trekking lower for the past few weeks. From an individual stock standpoint, we've also seen breakdowns in a broad swath of leading groups like clouds, industrial metals, industrial, social networking, retail, oils and energy, etc. Thus, the selling was already occurring well before we had that post-Thanksgiving sell-off on the Omicron news. So I started out with that discussion in my Benzinga.com interview, but I never got to the second part of it, which was this. In alibied selling, a news event is used as, obviously, an alibi or excuse for selling by institutions who must conduct their selling operations over the course of several days and or weeks. It is never a one-and-done type of thing. The way alibied selling works is smart money will sell on the day the initial news event, the alibi, hits. What happens over the next few days is that this news is revealed to be less serious than originally thought, or even much ado about nothing at all, triggering a rally as the dumb any sees an all-clear signal and piles right back in. So, Friday's Omicron virus variant news was walked back over the weekend, as I thought it would be, and we were off to the races on Monday morning. What happens is that the smart money uses the Monday rally as something to sell into, and again into the small rally on Tuesday before the reverse repo man himself, that would be Fed Chair Jay Powell, pulled the plug with his comments about no longer referring to current inflation as transitory during his congressional testimony that began yesterday and continued today. Keep in mind that when I refer to Tuesday, I'm actually referring to November 30th, because this report was written on Wednesday, December 1st. Anyways, continuing here, that led to yesterday's big sell-off and another morning rally today, that would have been Wednesday, December 1st, on a big overnight futures jack was sold into again as well. Some speculated that the overnight jack was based on hopes that Powell would walk back his comments about inflation during today's second session of his congressional testimony. While one can never know for sure the motives or intentions of sellers, that is, whether alibied selling is indeed taking place, one can infer it. I inferred it by the fact that A, many leading areas of the market were already selling off days and weeks before Friday's news. That was the news after, or the day after Thanksgiving when we got the Omicron news on Thursday night, so that would be Thanksgiving evening. And B, the news seemed to be overhyped as a dangerous new variant and therefore puzzling as a direct cause of Friday's selling, which was actually quite severe. So far, the objective market evidence points to a high probability that what we've seen over the past few days has been a classic instance of alibied selling, and it is why I have leaned into the rallies on the short side this week with good results. Nothing succeeds like success, and this provides prima facie evidence that my Alibied Selling Theory was correct, at least on a practical trading level. If we look at a chart of the Nasdaq Composite, we can see how this plays out. You can actually see that the market topped on November 22nd. You had a breakout to new highs, big outside reversal on higher volume, and then you headed lower from there. So by the time we got to Thanksgiving, we had already seen the market coming down for 2-3 days. It was 3 days off the peak, actually. And so you had the news on Thanksgiving Day, which was the 25th of November, and then on the 26th, that Friday, the market broke lower. Volume was lighter, obviously because it was a short holiday trading day. And then over the weekend, the Omicron news, which was released on Thanksgiving evening, turned out to be not such a big deal. And so the market rallied the very next Monday, turned higher. And then that took the Nasdaq Composite into the 10-day line. And so the big money used this as an opportunity to sell into. And notice that the volume levels expanded as the market broke very hard and took the Nasdaq down into this low here, which is where you then posted something of an undercut and rally move. So that's, to me, is logical at this point. And then you get more news coming out that Omicron is not so bad and everything's fine, don't worry. And they gap the market up big a couple of weeks ago, and then it runs into resistance along the highs before the Thanksgiving break, or before the before the Thanksgiving news, so right along there. And then you rolled lower, and now you're testing these lows. But you see how each of these rallies, which is caused by news about the Omicron virus being not really a big deal, which I think could have been obvious to anybody, since the South African doctors who first detected it stated quite clearly that the cases they were seeing among those who had this new variant were showing very mild symptoms. So in that sense, it's kind of like the common cold with a PR agency. Now you notice you get another rally after the Fed meeting because the Fed was allegedly dovish. So they get the market going. That's a follow-through day. But as most of you know, I pay no attention to follow-through days because they're useless. And this one turned out to be just as useless. But again, if I see some long setups like undercut and rally setups, I'm going to take 1 or 2 long positions just to test it out. And I don't really care whether it's a follow-through day or not. If we've been coming down long enough and things start to get pretty obvious, so you're coming down for at least 2-3 weeks here, and you see indexes like the NDX bouncing off of the 50-day line on Wednesday. If we look at the S&P 500, you see it holding along the 50-day line. So you get this big rally in here. So it actually held from a point just above the 50-day line, and then it tried to break out on Thursday. But you get the big rally, and everything fails immediately. So if you're watching it, and if you're watching the market on Thursday morning, the futures were up pretty big overnight, and then the Bank of England came out and announced that they were raising their key rate 0.25%. Not a big deal, but at that point, I was up about 2.5 hours before the open, because I will trade in the pre-open, and my platforms open up at 4 a.m. for trading. I don't know who gets to trade at 1 or 2 a.m. in the morning my time, but somebody is. In any case, that's when I come in, and I noticed that at that time the futures started to reverse, and of course by the open everything was pretty flat. And the NDX opened up slightly and then just reversed very hard on Thursday. At the same time, you saw a bunch of stocks break back to the downside. And I would point out some of these names, like if you look at Alphabet, you can see that on Thursday, it reversed at the 10-day and the 20-day line. So if I went long on this shakeout at the 50-day line, but I'm also wary of all of this because I don't think the market is worried necessarily about what the Fed does or doesn't do, or whether they are dovish or hawkish. What I think it's worried about is the Fed's lack of understanding of what's going on, and the fact that they're probably just shooting in the dark. But yet, Powell has to make sure that he sounds like he knows what he's talking about. But I don't think they have any idea what they're doing, because they're off the charts when it comes to the amount of money they printed and pumped into the system over the last year and a half or so, to the tune of over $7 trillion. In any case, coming in on Thursday morning, I see these names opening up. I see the futures rolling over. I'm alert to the fact that if they break back below the 10 and the 20-day line, so a name like Google breaks back below the 10 and the 20-day line, it becomes a short sale entry. And that shifted very quickly. And this is something else I refer to as the 360-degree approach to trading in this market. Because when you look at individual stocks, there aren't that many trends, and if there are any, they don't seem to last very long. So what happened here on Microsoft? Well, you had the nice bounce on Wednesday with the market off of the 50-day line. That was here. Volume was above average, but not necessarily heavy. And then you ran up just above the 10-day and the 20-day line. So the magenta line is a 10-day line, the green line is a 20-day exponential moving average, and it reversed back through that and it triggered a short sale, and then it ended up moving lower on Friday. But notice how you undercut this low here. So for those of you who've read my book, Short Selling with the O'Neill Disciples, an undercut and rally is a near-term cover point. So that's traditionally how I came up with the undercut and rally. I use it as cover points for short sale positions. So let's work through this. First of all, Microsoft is a double top short here. And I will take the closing price here and use that as my trigger point. So if it rallies above that or up to that point, then I will come in and short it there. Notice it breaks down hard. Then you get the bounce at the 50-day line. So if it comes down to the 50 line, let's say I'm short here, and it comes down here, I will cover. Then I'll watch and see what happens. Now it bounces, it looks like it may want to head higher, but it doesn't. So on Thursday, it reverses at the 10 and the 20-day line, and that triggers a short sale re-entry. And this is traditionally how I've used bounces off of support, either at a moving average or on an undercut and rally, which is what we have going on right now. But this undercut and rally could very well just end up carrying right into the 50-day line, and so Microsoft becomes a short again. So we want to watch these big stock names as we progress into year end, because in my view they are the key to the market. And as I stated during my benzinga.com interview, I'm keying on these names as adding further confirmation to my Alibied Selling Theory. Now, it seemed to me like the guys on this show, and I love them all, they're great guys and they're good traders, their eyes kind of glazed over with all this, and I can understand why. It's a little esoteric, but it's how I'm operating right now. And so far, things seem to be proving out this Alibied Selling Theory. But I wanted to explain it to everybody so that you know what I was trying to talk about in my benzinga.com interview, but really didn't get a chance to. So hopefully this clarifies it. And my view right now is that if the market is going to break lower, then you're going to see breakdowns in some of these big stock leaders that have been holding up. So if you look at Microsoft, for example, it's been holding up, but it came undone or started to come loose earlier this past week, and now it's really come loose. So in my view, if we do get a second wave down, it will be driven by breaks lower in these leading stocks that are just starting to come off of their highs. And you can see other names in the market that are acting similarly among semiconductors, which have been a leading group, and some other areas that you can check on your own. But I just wanted to explain this Alibied Selling Theory because it is critical to the context that I'm trying to create in my mind that helps me interpret what I'm seeing in real time. Doesn't mean that my theory is necessarily 100% correct, and it can be disproven if new information comes through that negates the theory, but for now, it's in force. Anyways, thanks for watching this video. I hope you got something out of this, and feel free to check out GilmoReport.com when you have some time.